October 1st, 2024. This is the S&P 500 E-Futures Mini on the 2000 tick chart using NinjaTrader 8. This is how I saw the charts today. It was kind of a tricky day for me. I mean, other people might have found it a lot easier, but there was a lot of chop that I couldn't quite get a good read. I couldn't get my channels to fit all that clean. So you end up with all these really, really small channels. And with these small channels, when you have a break and a tested extreme, it's hard to tell if it's like part of one big channel or just kind of a small independent channel. So there's a constant, a lot of reversals because you can see the EMA, which is this blue line. See if I can do this. You can see this EMA, which is this blue line with prices shooting above and below. So I found it a little more tricky. I took a total of 2 trades and I actually lost on both. The first one was an error that I could have avoided by not trading the news. And then the second one was an emotional trade that should have been skipped completely. I kind of know the reason why I took it. It was just kind of like felt like it was a bit of a revenge trading creeping in. There was only, I would say, about 2 pieces of economic data that came out today that really moved the market. The first was at 7 a.m. Pacific Standard, which is about right here. Actually, the first one was at 6:45 Pacific Standard, which is about right here. And maybe it caused this drop, but it was the final manufacturing PMI. And then at 7 o'clock, this one moved it a little bit more. This is the one where I took a trade shortly after the news came out and lost. It was the ISM manufacturing and JOLTS job openings. And then the rest of the day, it kind of threw me off. So I'm not sure, as I said, it was a little bit more confusing for me because it was chopping below and above the EMA. And it was just harder to find very good overall global channels. So I ended up trading all these, or not trading, but just looking at all these setups for these smaller channels. I'm going to get into the trades right now. Also in the news, I don't know if it's super relevant, but there's like a lot of turmoil happening in the Middle East with, I guess, Israel, Iran, out there in Lebanon and Beirut. So I guess there's just a lot of stuff happening. So that caused a lot of extra little noise. And there was quite a few FOMC members speaking today that also created a lot of, say, kind of like noise. They kind of came out at around 11, well, actually 8 a.m., and they kept speaking throughout the day with no designated finish time. So they would just be talking, and people would interpret things, and it could or could not affect the market. So I generally just ignore it. The pre-market, there was this trading range. There was maybe a good second entry long here, but this is in pre-market. I like those 2 legs, 1 leg down, push up, pull back, second leg, and then one leg, 2 pushes up, and then the second leg. So this actually looks like a decent trade. Unfortunately, this is AM, and it's not much volume, but if this was happening in regular trading hours, this would have been worth considering. Breaks out of this channel, breaks out of this trading range. It's just really choppy, really tight trading here. Moves down what I think is this green down channel, but I didn't find any good clean setups. It's far from the EMA. Bias is clearly bearish, but there was no clean way, at least in my opinion, with my experience, to enter. Then it kind of consolidates here. You do kind of have like a first entry short, and then it breaks and it keeps going down. Then you hit another consolidation area. You could argue, yes, there's a new low here, first entry short, technically a second entry short, but there's these setting up like second entry long and second entry short, but the range and the character of the overall price action is very tight. So I wouldn't trade any of this and trust the movement because these candles are pretty much just side by side. When you look at this in real time, they just look like they're just piling up, stamping without really any clear bias yet. I did try to look for overall bigger bias, and I came up with this red one. This red trend line, it looked like it fit pretty well. The bottom support of the channel didn't fit all that well because there was only 1 touch here, and you only really get this 1 touch for the rest of the day before it turns around. But this red one did hold pretty well. Then prices continue. It was just really, really, really choppy price action. Hard to get a good, or hard to convince myself there's a good entry here. It eventually makes it all the way down to here. It kind of creates a double bottom, breaks out of this red down channel, and I'm expecting it to test the low. So it breaks and it does test the low, and you can see the bearish momentum is starting to wear out because it's pressing against this top of the red trend line at this point because I can't really trust it as a channel. and it finally breaks out and tests the low, and then it pushes up. So you have a new high, excuse me, new low here, but you have to start it from here. First entry long, pull back, second entry long. This isn't a good signal bar. It's below the EMA. EMA here is still biased, even though it's starting to flatten out. You also have a new low here. You have a first entry short here, pull back, second entry short. This is when the economic news came out. So this is a failed second entry short. Now it's an almost trade just because it came out during the news. And this is a huge candle. This is like 9 points. So if you decide to jump in on the highs here, you're already creating a micro triple top here. It's really risky. So I call it an almost trade. Plus, the economic data is just currently being digested, which is the final, or actually the ISM manufacturing and job openings. So you can see if you did take it, you would have flashed up and gotten a decent trade. But this all happens in about 30 seconds. So, it's easy to get shaken out or easy to get your stop hit as well. In this case, if you moved your stop quickly down to here, you would have been safe, but you're taking on this 9-point risk. Pushes up what I thought is this orange up channel, creates a new high, and then I thought this is actually creating a lower high. So in real time, this is where I take my first trade. I saw this is a break, pushes down. I thought this is a new a higher low. This low is higher than the other ones, and it closed with a nice signal bar. Technically, it's bouncing off the EMA. I like that it was a good engulfing of this previous candle. But in hindsight, this is at 7:01 and 33, and this news came out at 7 even. So this is still relatively early with the news just coming out that I should have skipped it, but I thought this was a good enough trade. I mostly like the engulfing. I like the one tick below, flush up, and close at the high. So I entered at the high of this original signal bar. I got filled, and it immediately flushes down and takes me out. Takes me out, and then it kind of backs up. Looks like it was going to go reverse. So that one, in hindsight, should have been skipped, mainly because it was still in the middle of the news coming out that I should have left it alone. But I know that it affected me. Well, in hindsight, I see it more clearly that it affected me because prices continue moving down, moves on this green down channel, keeps going, break of the green down channel, tests the low. It starts moving on this red down channel, and I was playing with the idea of potentially a larger channel about like this. And there's two legs inside, and it broke and tested the low. So I'm thinking whether you're playing this bigger one or this red, it already broke and tested the low. So the down may have already played out. So it starts reversing up, breaks above the EMA, and it starts flushing back down. So I'm thinking, okay, I'm not sure where this bottom of this yellow down channel is, but I think it might be here. This is more reliable because it actually touches once, touches twice. This was played with kind of zoom out a little bit. Actually had a little bit tighter here at one time, and then when this broke out, I moved it up. So it's pushing down. It broke this red, tested the low, pushed up, went down, broke this green, tested the low. So this is what I call a no reason trade. There's no reason to have taken this trade. And I think I just mainly reacted off of feeling a little bit triggered from this previous trade because I thought this should have worked out, except for the fact that, I failed to take into account that the economic data came out here. So I just saw this as a decent signal bar. So I kind of justified the trade as seeing a new high, first entry long pullback, second entry long failure. So even before this bar closed, as soon as it opened and ticked below, I jumped in on this trade. And in hindsight, this totally should have been skipped. It's a bad trade because I'm already creating a double bottom, potentially a triple test now. And whatever trend line you're looking at or trend channel you're looking at, it broke and tested low. If you're looking at the red one, broke, tested low, came up. Green broke, tested the low already. So this is the lowest, and it made a matching double bottom. So there was no real clear reason to take this trade because it looks like the bears have been exhausted. More likely, it's going to have a correction, but even then, doesn't mean that you should just jump in long. You need you need the setup to prove itself. But I did jump on this. And as you can see, it punished me. It flashed up, hit me, got my second loss for the day. And at that point, I just decided, yeah, that's a wrap. I couldn't take any more trades. I just didn't want to potentially risk any more. And I know for sure knowing like pretty shortly after the results of this trade, this was a bad trade, I knew the outcome of further trading would have been very risky because I would likely have gotten more triggered and revenged. So then prices move up on this pink up channel and reverses back down. I was thinking maybe there's support here. Maybe this is in some kind of trading range. Comes down, breaks a green town channel, tests the new low. You technically have a new low here, first entry short. You have a second entry short here, but for the same reason that you shouldn't really take the short here is you're already pressing toward the bottom, the low of the day. So it's risky. And in this case, it already broke out of the green down channel and tested the lows. Then prices move up. There's a second entry short here, but it's a bad signal bar. It's above the EMA. Potential triple test, but it just doesn't look very clean. It's a little choppy and wicky. Pushes up and then creates a new high, potentially breaking out of this trading range, which I'm not 100% confident on because it actually could be slightly higher. So I just left it here initially. And it's coming back down. So first entry long, pullback, second entry long, but this isn't very clean. It ends up setting up this relatively decent setup, in my opinion. Creates clearly a new low. Overall bias is bearish because you're looking at it's creating lower highs every time and lower lows. It is flattening out. Maybe it's in a trading range here. I'm not sure. But even if it was in a trading range, it looks like it's hit the high of the trading range and it's going to come back and test the lows. But what I saw is I saw a new low here is a first entry short, pullback, second entry short. Second entry short technically has failed, but I feel like it's a trap. So when I saw this in real time, I was also playing with this. I kind of dragged it up and I thought this could still kind of fit. A little bit harder to do now that it's printed, but I thought this could actually kind of fit pretty well with one touch, two touch, and then including these two guys. I think I slightly had it like right there. Now, technically this candle never touched it, but it's looking like it's lost power. It broke this orange up channel, tested the highs, made a second attempt, and now it's flushing down. This flush down was pretty nice. The problem with this thing is it's kind of a large candle. This is 18 ticks. So it was first entry short pullback, second entry short, potential second entry short failure, but is proving to be more likely a lower high and a flush down. It didn't make a matching bottom. Making a matching bottom would have been perfect, but this is a decent setup, I think. And probably to enter this with less risk, I probably would have entered probably at the low of this guy right here, just to reduce the amount of reduce the size of my stop loss. Looks like if it did enter here, I would have gotten filled and flushed down. So as it moves down, then I saw this as a new high, first entry long pullback, second entry long. Second entry long on this candle has failed. So I thought this is actually also a possible trade. Relatively nice setup because it's showing, okay, the bias is clearly down. I have failed second entry long. EMA is starting to hold, and I have a really strong signal bar close. Yes, I mean, you could hit some kind of resistance here, but more likely it's a press down further. I'm not as concerned about this one or this one because it already twice pressed down. If this is the only guy down here and everybody had a haircut sitting above, then I would be more concerned that there would potentially be a bounce right here. Then it flushes down and it looked like it would have worked pretty well. It's this really tight consolidation, choppy trading, just a lot of wicks, reverses up. You have a second entry short here, so it's a new low. First entry short, second entry short, second entry short, pretty far from the EMA. Is a second entry short above the EMA. I kind of didn't like that, so I was looking for a lower high. And you don't get a lower high, it just kind of reverses and pushes up. Then you don't really get any second entries, it's a bunch of first entries. You have a new high here, it's a first entry long right here. Break of this orange down channel, also test the new low. So when you see this, and made a new low. I'm not ready to go long yet because it was below the EMA. EMA was holding. I needed this candle to actually close above here. And you kind of get that, but it was you don't get a close. You get a spike up and another close below. So any kind of trade here I would have abandoned or any kind of setup looking for it. I would have looked for a higher low and you don't get a higher low. It just kind of reverses. And again, this is part of the complication today is there's a lot of this choppiness, which for me made it a little confusing. Pushes up in this orange up channel, say new low. Technically, I have a first entry short here, but I kind of grouped this together. Looks like it's just sideways, so this is localized new low. Technically, there's a newer low here and a first entry short, but I said first entry short, second entry short. It's an inside bar. This kind of tells me that, if I was trying to trade this, I'd stay away. And again, it gets kind of ugly here. Again, it doesn't fit too well. You can also, because I did at one time, was drawing these smaller trend channels, but then it breaks, and then you don't get like clean legs. You just kind of get a lot of chop. So it just tells me like this is an area that I'd have to be super careful of if I was still trading. Technically, I have a new low, first entry short, but then the count, I would just reset it here because it looks like a localized new low, and you only get a first entry short here. Another two legs down, it's just really choppy. Again, it kind of moves up. This price action is just it's a combination of really large candles, like a 6 point candle, another 4.5, 4.75 candle. There's just big candles, lots of wicks, very choppy, made for kind of a confusing day. Plus, this is just noisy because you do have a push down, another shallow push down, then you have just this whippy price action, which made it, again, in my opinion, a little more challenging, especially for me and my experience level. Then prices come down, hits this consolidation area. I don't really see any really clean setups because it looks like it's just range bound. But even then, the range bound, the candle sizes are pretty much almost the size of the range, which makes it hard to trade. Pushes down, kind of creates this consolidation area, breaks up, one leg down, pull back, second leg down, but you hit another consolidation area. And these are kind of what I call piano keys because these bodies are about the same size and they're just side by side and they take up pretty much the whole range. So it's just when you see piano keys, it's hard to really jump long or short. You need price action to get out of this zone to feel like you can read it. The prices start moving up. There's no clean second entries. Far from the EMA, just small candles. I do see this last setup, well, it ends up being the last setup that I saw was like a new high, say first entry long pullback. I like this second entry long. The second entry long is actually pretty nice in that it's a reasonably sized candle. It is three points or 12 ticks, but it's bouncing off what I found was this yellow up channel. Now the yellow up channel, whether it's a clean channel or not, because I had it here and maybe had an overshoot here, what does matter is it's bouncing off this confirmed support. One touch, two touch, three touch. So up to here, it's a little vague because you could still be tweaking it this way. And then in this case, it doesn't touch. And it kind of fits a little bit nicer here. But you still have this overshoot, or you can actually drag it up a little bit. And when this formed, I was thinking, okay, if you adjust it just so it does touch, it gives you a second entry point, which is nice on top of the good signal bar, on top of the two legs down. So I think the way I have it drawn here is reasonably close enough. And whether there's an overshoot here or not, it didn't really come into play because it just kind of kept going up. So I think it was actually up to here. So as I said, the only thing that really matters in this case was this trend channel support, bounce off of it. It is potentially going into the highs of the range, but the range, other than this potential triple test, it could actually have been higher here, in which case you still have enough room for a quick 1 point scalp. So I like this trade. Then prices continue moving up, breaks out of this yellow up channel or yellow zone, and it hits this consolidation area again, and it's just noisy. So no clean trades in my opinion. Then it flushes down during the pretty much the last hour. It just gets again noisy. You do have a second entry short here, but I didn't like that it was above the EMA, and you have two dojis in a row, so it just gives me a little bit of pause. Then it flushes down, pushes up, first entry short. You get a second entry short here, but it's an inside bar, so I don't really count it as a clean second entry short. You could say it's new low here, first entry short, push up. This could be your second entry short, but this is also a really large candle. This is also getting toward the end of the day that I don't want to try risk trading. Well, I already decided that I wasn't going to trade, but if I saw this and I was in the green, I still wouldn't trade this. And that's kind of how I saw the chart today. A little more confusing, a little more challenging for me today. First trade was, well, should have been, both traded actually should have been avoided. I should have been more cognizant of the first trade being right when the economic data came out, caused the loss. And the second one was, as I said, a no reason trade, not a very good reason, no justifiable reason to take that trade, especially going short. So hopefully that was helpful.